Sup guys, John again, here today with a video on support and resistance. What are support and resistance areas? Support and resistance levels act as barriers that keep the price of a stock within a certain range. Support levels are reached when the price of a stock is moving downward and demand, aka the buyers, is high. Resistance levels are reached when the price of a stock is moving upward and the supply, aka sellers, is high. I'll show you some examples pretty shortly, but I'm just going to show you this quick PowerPoint. Support is the area of a price range on a chart where a downtrend is expected to bounce back and reverse into an uptrend. You can identify support levels from multiple previous bounces. I'll explain what all this means in a second. Resistance, the area of a price range on a chart where a downtrend is expected to bounce back and reverse into an uptrend. So it's literally the complete opposite of support. You can identify resistance levels from multiple previous bounces, just like you can with support. Example. So right here we see overall this stock is trading within this range. This is the highest it can go, and this is the lowest it will go. So this is an area of resistance because once it hits there, it can't break through it yet. So it bounces right off it. Resistance. Support. Goes right back down to this support line. And you can see that it's having a hard time breaking through the support, continuing a downtrend. So it bounces right off the support line and goes right back to the resistance. Now this is a good resistance level and support level because we see the more times it bounces off that level shows that it's building a stronger resistance level at this price right here. And same with the support. It bounces off it multiple times right here, here, and here. So that's building a pretty good support level. So breakouts, when the stock price breaks an existing resistance level, generally it will use that resistance as a new support level, and the price will find a new resistance trade at that higher price. So going back to this slide we were just on, it hits the support level, it reaches the resistance level, right? It breaks through it, and you want to wait for like a candlestick close confirmation above that resistance level to really give you a good idea, okay, it's going to break right through. So it breaks through, it could pull back. That's why you want to wait for this candlestick to close. It breaks above it, and old resistances turn into new supports. So as we can see, it breaks through. Now this resistance line turns into the new support. So as we see down here, this is the support. Once again, it just literally moves up to here once it breaks through. Here's another example. As you can see in this example, once the price level crosses the resistance level, so resistance level, boom, right here, it uses that as a new support and vice versa. So here's a resistance level, bounces off it, can't really break through it. Once it does break through it, candlestick confirmation, it trends up to the next resistance level. 1 touch, 2 touch, 3 touch, 4 touch. So this is a pretty strong resistance right here. It does break through it, and it bounces all the way up to the next resistance level. So as we can see, this was a nice support originally. It had a hard time breaking through that. It did break through it. It bounces down to the next one. And so just think, support and resistance levels are like kind of like the range that it trades in. So from like this day to this day, it's trading within this range right here. So how can I apply what I just learned in this PowerPoint? Many traders strictly trade using just support and resistance levels. If you recognize a stock to be at its resistance level, watch for it a little bit to see what the next moves will be. And if it dips, you can buy put options, short the stock, etc. If the stock is bouncing off the support level, It's the opposite. Once again, watch for the next few moves, candlesticks, and act accordingly. If it bounces off the support and reverses upward, one could buy stock or call options. So I'm going to show you some real life examples from what I have seen recently. So first we're going to go to Amazon. I'm going to go to the 20-day chart, 1 hour. So I already have this highlighted. So right here we can see that starting on June 23rd all the way until July 1st. So for about a week it was trading within this range. It wouldn't go any higher than this, and it didn't really go any lower than this line. I'll explain this in a second. So it bounces up to the resistance, comes right back down to the support. So this move right here at 27.84, it goes all the way back to 27.19. So that's like a $60 move, just from support to resistance. So if you were to buy put options or short the stock, that would have been a good idea there. Here we see that it bounces off the support, won't really break through. We see these longer wicks right here. It shows a buying increase. So then it hangs out around here, bounces right off, right back up to the resistance. Now, right here, it goes down to the support line. There's a candlestick close below it, below the support line. So now it's treating this as a new resistance. Right here, once there's a candlestick confirmation below it, there was a move. So 26.92 right here. If you were to get in right here, you could have rode it all the way down to 26.31. Once again for another, that's a $30 move right there. $60 move, my bad. Rides back all the way up to the resistance level, breaks through, treating it as a new support, goes all the way back up to the new or previous resistance level. Another example I want to show you guys on Alibaba. There's another kind of range I want to talk about right here. So overall support and resistance lines right here. Resistance, support. We can identify that because it bounces off right here, here. All these having a hard time breaking above it. Does break above it. Acts as a new support for a little bit. Breaks right back down. So this is kind of like a comfortable range for Alibaba to be trading in. We see that this is the support level because it bounces off it multiple times. This is a 20-day 1 hour. So each one of these candlesticks you see represents 1 full hour. So for 1, 2, 3, 4, 5, 6, plus all these for like 30 hours, I'd say, it was coming back all the way down to that $213.87 support range. We can draw in like intraday and intra-weekly support and resistance lines, but that's for another video and for another day. So from this support, if you were to get in right around right here, candlestick confirmation close above the support line, you could have rode that all the way from $214 all the way up till it hits the resistance all the way to $224. $10 move. If you were to hop in some call options, would have been huge returns right there. We see that it chills at the resistance level, can't really break above it, comes right back down, right back up. New support, once it flipped over the resistance, treats the resistance as a new support, broke below it, candlestick confirmation, and rides all the way back down to the 214 level with lows of $211.82. So this video was really targeting beginners, people who don't know support and resistance levels. It's a pretty easy concept to understand. And if you apply it correctly, you can be extremely profitable. Thank you for tuning in today. I'll see you soon.